Hello everyone. So this is a different type of video. I'm trying to figure out why the lighting looks a little weird, but we're just gonna rock with this. Why does my screen look weird? It's like got two different colors going on. I don't know. My phone's been acting up. It's strange, and it's only like a year old. Anyway, so coming at you with kind of a different type of video. These are the types of videos that I do on my news channel, which only has a couple uploads to it. Well, a few uploads. I plan to do more, but yeah, surprisingly, the Russian trolls haven't discovered it yet. But maybe they will now. So anyway, today, this is going to be a news-oriented video. If you're following the headlines, first of all, I don't know, I just feel compelled to mention, first of all, this isn't what this is going to be about, but another school shooting. Like, when are we going to be tired enough to actually do something about these unhinged, never mind. So anyway, that's extremely unfortunate, and it was, kids at a STEM school, like, Anyway, so what I did log on to talk to you about the other big headline, which I don't think the school shooting is getting enough coverage, but as of a few hours ago, big headline, Don the Con, I don't say the president's name. Anyway, he refused to release his tax returns to Congress. But the New York Times has just now released 10 years of tax information dating from 1985 to about 1994, something like that. Also, New York State is trying to take measures to release his state tax return for more recent years. So now you might be inclined to say, well, what do we need to know about what he was doing back in 94 and back during the 80s? Let me tell you, don't let that distract you. So I actually have the New York Times article right in front of me, and we will go through the bullet points they illustrated, just pulling out key things that this period of tax info they've obtained actually reveal about him, and it's quite revealing. So yeah, I'm just gonna say a leopard does not change its spots. I almost said stripes. Not only that, but the news has also been trying, different publications have been trying to out that family as having built their quote-unquote wealth on just years and years and years of tax crimes. So yeah, the good news is if you're sick of all this, these past tax returns actually they don't exactly dispute that assertion that they've been lying on taxes and doing all kinds of crazy stuff. So let's jump right into the New York Times article, and it's called 5 Takeaways from 10 Years of Don the Con's Tax Figures. It doesn't say Don the Con, it says his last name. I just don't say that name. But if you want to look it up, that's the title. 5 Takeaways from 10 Years of that person's tax figures. So, yeah, so I'm just skimming through this article here. So it looks like there have been critics who've said, oh, well, the news, the info source at the Times have been using, to talk about his taxes, isn't an accurate source, but the Times, preemptively shoot down that claim by pointing out that they've done similar with his father's tax returns. And once his father's actual returns were obtained, the info they had actually matched up as accurate to what he had filed. So also just like knowing, like whatever, I try to stay informed, um, not just through the news, but I'm inclined to believe what the Times has published in this case. So, all right, so here are, let's see, how many bullet points are there? 5 things that they have identified that 10-year period, 9 to 10 year period of past tax returns reveals. So number 1 is that Mr. Don the Con was in deep red even as he peddled deal making advice. Now, a lot of you are probably familiar with Art of the Deal, which was his bestseller book that came out in the 1980s, actually came out in 87. And, during the 80s, he was a lot more respected than he is now by the mainstream, and just viewed as this super wealthy person who was a great deal maker and had all these properties and just like stuff and whatever. So he wrote a book about it, and obviously his name was synonymous with wealth and the lifestyles of the rich and famous. That TV show used to come on. So the book was about how he was a self-made billionaire or whatever the crap, and how he's such a great deal maker. I didn't read it, but I'm just like giving you a synopsis. So just skimming through this. So the tax info that they've obtained, contrary to his claims that his success has been attributed to reversing, everybody knows he's been in several bankruptcies, and he says he's been able to reverse the bankruptcies, sorry, I misstate. So like everybody knows about the bankruptcies. He says that the bankruptcies have been attributed to like the economic cycle, basically saying the economy went into recession, so that's why he went bankrupt. But this new tax info that's been obtained reveals that he was already in financial trouble, deep financial trouble, before the recession and before, it wasn't like he just upped one day and filed bankruptcy, because like the economy went bad. Like he was just not a very good businessman. And he was in financial distress at the time that he was selling this book, supposedly telling people how to be like him or whatever, or how he made himself into this quote unquote billionaire. I'll believe it when I see it. That's why I keep saying quote unquote. But I'll believe it when I see it from a credible source, i.e. like hard tax returns that show no evidence of fraud, money laundering, extortion, like whatever. Anyway, so this individual has attributed his, I'm just reading, he was on the Forbes list in the 80s. Most people who are aware of him and his claim to fame know that. But the New York Times says, although he was attributed to construction and acquisitions in the 80s, his first time on the Forbes rich list was 85. And he appeared on that list independent of his father. However, his net worth, which was listed as 600 million back then, also included his father's real estate empire. So it would be like, like you claiming your parents, your assets as part of your net worth. But talking about your self-made. So anyway, article goes on to list his vast debts, including his tower and the Grand Hyatt, his Atlantic City casinos, which were already heading downhill by that point. And in 1985, his business reported a loss of $46.1 million and carried over a $5.6 million loss from earlier years. Here's where the good stuff starts. Because basically what these, what this 10 years of tax info found was that he had claimed over $1 billion in losses, but yet they're still like running around living this fancy lifestyle. And we all know that, people weren't buying his steaks and wearing his ties like that, such that he could afford to lose billions of dollars or over $1 billion. I'll get to the amount in a second, but you know, to be able to post those types of losses, but you're still like installing golden toilets in your apartments or whatever, like, come on, something's not adding up. So, let's see. The article goes on to state that his businesses were generally created as partnerships and they did not pay federal income taxes themselves. And instead, their gains and their losses flowed upon Don the Con's ledger. To put his results in perspective, the Times compared them with detailed information that the IRS compiles on an annual 1/3 sampling of high earners. Most of them appeared, like Mr. Don the Con, to be businessmen who received what is known as pass-through income. For 85, the IRS information indicates this. Only 3 individual taxpayers in the sampling reported bigger losses than Don the Con. So basically, out of this group of high earners that the IRS gathered info on, I'm not sure how many people were in the group, but he ranked number 4 in the amount of money that these people lost, meaning he was the 4th biggest loser, but yet he's writing books about like making deals and how to become like a self-made billionaire when his billionaire status, well, back then he wasn't even, he wasn't listed as a billionaire, but certainly today his billionaire status is definitely in question. And he won't prove it by releasing his taxes. So anyway, number 2, in the article, in multiple years, he appears to have lost more money than nearly any other individual taxpayer. Yeah. So in many of those years throughout that 10-year period, he was the biggest loser, or almost the biggest loser. It does say nearly any individual taxpayer. So the results for that year, for the years that followed, traced on an arc of continued empire building and gathering loss. So he's losing money throughout this time. He bought the Eastern Airlines shuttle for $365 million. It never made a profit. Was that, I remember, I think he tried to start an airline. That might be what that was. But yeah, so basically he bought this $300 million like part of an airline or whatever, and it never turned a profit. So that's just basically like $365 million down the drain. Or at least that's how it looks at face value. And then he spent more than $7 million a month to keep it flying. So not only is he, you know, obviously he never recouped the $365 million for purchasing it, but he's also now bleeding $7 million each month just to fly the planes. His Taj Mahal hotel and casino opened in 1990 with more than $800 million in debt, which sucked revenue from his other casinos, putting them along into the red. So this is how his casinos, like, you know, you may be aware that, like, I don't know how many, I know that his Vegas casino is still open, but like a lot of, or at least, I don't know, he's had some casinos close. And so this explains, like, in the 90s what was going on with that. So the Taj Mahal was such a money pit that it canceled out the revenue that his other casinos were making. So then they started, like, not generating a profit. Great businessman. Makes you want to go out and get that book, huh? So year after year, he appears to have lost more money than nearly individual taxpayer, according to the IRS information on high earners. So this info comes directly from the IRS. That statement about him being one of the biggest losers, one of the people, you know, to have lost more money than nearly anyone in the entire United States. You know, especially those people who are on the IRS's high earner list. Um, Publicly available database with taxpayer identifying details removed. So in 1990 and 91, his core businesses lost more than 250 million a year, which is more than double those of the nearest taxpayers in the sampling for those years. So I guess he was ranked number one on that list of like losses, people losing money, in the high earner group. And he was losing more than twice as much. Let's say he's number one. He's losing more than twice as much as like number two on the list. Great deal maker. So, tax code allows owners of commercial property to write down the cost of their buildings. Valuable tax shelter known as depreciation in the art of the deal. He cites one of his Atlantic City casinos to show how it works. Built for $400 million and depreciated at a rate of 4% a year, he said it could allow him to shelter $16 million in taxable income annually. Okay. But his example, meant to demonstrate the magic of depreciation, shows something else. Depreciation alone cannot account for the hundreds of millions. So he's saying that he's able to write down 16 million based on the 4% rate that the IRS permits for depreciation. I think this is saying. So he would be able to shelter 16 million. But the article is saying that that 16 million is a drop in the bucket compared to the hundreds of millions of dollars he declared on his own taxes that he was losing. So again, something's not adding up. Like, you're losing all this money, buddy, but like you're like living high on the hog. And you're this excellent deal maker. Okay. So number 3, he paid no federal income taxes for 8 of the 10 years. Yeah. Business owners like Mr. Don the Con may also use their losses to avoid paying taxes on future income. Over the years, the losses rolled into a $915.7 million free pass known as a net operating loss that appeared on his 1995 tax return, pages of which were mailed oh geez. Let me reread this. And then I'll get to why I laughed. So let me rephrase this. So, business owners can also, there's also a tax break that you can get as a business owner, on future income, if you record a net operating loss. So he, reported those losses as part of a net operating loss that equated to $915.7 million. That's almost $1 billion in and of itself. And this appeared on his 95 tax returns. And the reason I laughed is because apparently, according to the article, someone mailed pages of that tax, his 1995 tax returns that showed that huge loss. Someone mailed those documents anonymously to the New York Times during the 2016 campaign. So, like, I don't know, somebody in his crew or someone he's pissed off, like, tried to expose him. But folks weren't willing to listen. Or maybe they didn't report on this back then. I don't know. Mixture of both, probably. So anyway, the new tax information shows how his net operating losses snowballed, reaching $418 million in 1991. That was fully 1% of the losses that the IRS reported had been declared by That was fully 1% of all the losses that the IRS reported had been declared by individual taxpayers that year. So his losses accounted for like a full percent of all the losses that everybody in the United States that filed taxes that year reported. And you got to remember, there's like I mean, there were a little bit fewer people back in 91, but now there's like 320 million of us. I don't know, like a lot of hundreds of millions of people probably filing taxes. So that's a lot of money for one person to lose. The Reading continued to accumulate apace. In all, Mr. Don Khan lost so much money that he was able to avoid paying any federal income tax for 8 of the 10 years. So he posted a loss so big that he was able to get by within, I guess, IRS rules, assuming that he's reporting correctly. He didn't owe any taxes for 8 of the 10 years because on paper it looks like he's not making any money. Meanwhile, he's like out in the world spending money. Whatever. So on to number 4, which is the penultimate point. There's 5 of these, so we're almost done with this list. My neck hurts. Oh. All right. Okay. He made millions posing as a corporate raider until the investors realized he never followed through. Interesting. For a time, Mr. Don the Con was able to stave off his coming collapse with the help of a new public role. He traded on his business titan brand to present himself as a corporate raider. He would acquire shares in a company with borrowed money, suggest publicly that he was contemplating a takeover, then quietly sell on the resulting bump in the stock price. Ooh. That's not pump and dump. What is that called? So, all right, let's rephrase this. So basically he would, buy shares of a company, use his public platform to suggest that he was going to take over the company. And you got to remember, he's got this reputation as a great businessman. People are thinking he's going to turn the company around or make it better and that they'd make money. So that would result in an increase in the stock price. People would get on board because they think, oh, this dude's a good businessman. He's going to turn the company around and we'll all make money because we're getting in at kind of like the ground floor or like a lower floor and it's only going to go up. But then he would turn around and quietly sell his shares in the company after all of you people, or like all of whatever, the investors, let's say, maybe not you people, but like all of the investors have gotten excited because they're thinking he's going to stick around and actually help the company and they've bought it. He takes advantage of that surge in stock price. And then he's like, he doesn't even publicly say, I fooled you. He doesn't even publicly say, I fooled you. He goes around the back way and quietly sells his shares in the company, so that he makes a profit off of like the price that he purchased the shares at before he tells people he's going to help it or suggests, implies, whatever, creates the impression that he's going to help this company. And then obviously he never helps the company. These people who, bought the stock at price A, they probably lose money because it eventually dives back down. But he's made off like a bandit because he got in at the bottom floor. He created he created the buzz and then he dumped the stock, when everyone else bought in. And that's, some of you, I don't know, some people might think, oh, well, that's smart. No, actually it's dishonest trading and it's manipulating stock prices with the intent to make personal gain off that. And that's kind of an issue. Because it's just dishonest, and in a way you're taking people's money because you're creating a false impression about what you're going to do with this company. I digress. An occasional quote from a high-profile associate helped burnish the myth. Interesting. Oh, so they have a quote from a person. He has an appetite like a Rocky Mountain vulture. His stockbroker, Alan C. Greenberg, told the Wall Street Journal in 1987 he'd like to own the world. From 1986 to 1989, Mr. Don the Con declared $67.3 million in gains from stocks. So he made 63, or at least he says he made $67.3 million, I guess, doing this, from stocks and other assets bought and sold within a year. Maybe that it didn't entirely come from this, but clearly, like, he knew what he was doing by doing this. Making money off of these people, taking their money. But ultimately the figures show he lost, man. So in spite of all that, the figures show that he lost most, if not all, of those gains. Are we noticing a pattern here after investors stopped taking his takeover talk seriously? So basically people stopped believing him and stopped investing because they realized he's a big fat liar. So number 5, and this is the final point, his interest income spiked in 1989 at 52.9 million, but the source is a mystery. Shady dealings, it sounds like. Let's see. So amid the hundreds of figures on 10 years of tax transcripts, one number is particularly striking. 52.9 million in interest income. So, like, obviously if you could gain interest on, like, certain banking products, bonds, things like that. Banking investment products is what I'm trying to say. This was reported in 1989. In the 3 previous years, Mr. Don the Con had reported 460,566, then 5.5 million. Ooh, that's a big jump in interest income. Then $11.8 million in interest. The source of that, and then it jumped to 52.9, The source of that outlier, 52.9 million, is something of a mystery. So they don't know where it came from. Interesting. Taxpayers can receive interest income from a variety of sources, as I was just trying to explain. So you can get interest income from bonds, from bank accounts if you've got an interest-bearing checking account, or like a money market account, CDs, IRAs, things like that, and also mortgages. Hard data on the workings of Mr. Trump's business. Oh, I said it. Hard data on the workings of his businesses is hard to come by. Interesting. But public findings from New Jersey casino regulators show no evidence that he owned anything capable of generating that much interest. Nor is there any such evidence in a 1990 report on his financial condition prepared by the accountants he hired at his banker's request. Interesting. So his bankers requested that he hire some accountants to report on his financial condition, and even that didn't show where this $52.9 million came from. Mr. Don the Con's interest income fell almost as quickly as it rose. Pattern, are we noticing it? By 1992, he was reporting only 3.6 million in interest income. So basically, that was the final point. This is basically just like more receipts, more paper trail of what suggests shady dealings, lying. That 52.9 million might not have come from interest income. We don't know what it is. Maybe he just called it interest income. Or I don't know how that happens. But it's unusual. All this is unusual. To me, my own analysis, it suggests, I'm just gonna talk about like the pattern of like rise and fall, and talk about that from like a sociological standpoint, let's say, or maybe psychological a little bit. To me, that suggests, maybe some deals are being made, but a lot of bridges are being burned, and this individual has been screwing a lot of people over and pissing a lot of people off, so that whatever the sources of this money, especially like the weird stuff that can't really be accounted for, whatever those sources were, those relationships probably weren't lasting. The same way people stopped buying up stocks that he would say or suggest that he's about to invest in and build up, because they realized that he was a liar and that he was just out for money by any means necessary, not caring who he screwed over or what lies he had to tell, feeling like he was above the law. And that is the individual that we have today in 2019. And I mean, like, the signs have been consistent. They were there in 2016. They've been there since. They were there before, but he kind of stayed out. I mean, he wasn't really involved in politics, so no one really had to go over him with a fine-tooth comb like this because, you know, he wasn't handling taxpayers' dollars. But, yeah. Anyway, a leopard does not change its spots. As I started out this video saying, I hope that New York will be able to get recent state tax returns released. That'll be interesting. This showdown between him and Congress will probably continue, where he's refusing to release his federal tax returns and they're continuing to try to compel them. We'll see where that goes. Nancy Pelosi has issued a statement saying, "Oh, he's tempting us to impeach him. He's taunting us." Okay, but what are you going to do about it? You know, like, idle threats yield no results. But anyway, that's all I got to say on this. This is a 30-minute video now, so I'm about to shut it off. But, you know, like, share, dislike, I don't care. I know some of you will, because I know some of you are trolls. But yeah, comment below. Let me know if you're interested in more videos. Actually, I do those on the other channel. Maybe I'll do them over here if people are interested in that. But because I want people to be informed and to at least, like, know that something is going on and then do your own research. You don't have to take my word for it, but, like, you know, hopefully this will spark some interest in you diving deeper and, like, researching from independent sources, because I actually do. I just, you know, glazed over this New York Times article because it's very accessible to everyone. But always when you see something in the news, read it and then compare it and go look for other sources. Compare it to what other mainstream outlets are saying if you want to, but go look for other sources if some of this stuff is publicly accessible information, you know, like that wealthy individuals list that was referenced in this article, like some of the names that people have named, maybe they've written books about stuff, whatever. You know, source out your own info too, so you can be informed and decide what you want to believe. So, yeah, that's about that. I am going to sign off now because it is late, and I will see you in the next video. Till then, take care, be well.